Loving can hurt. Loving can hurt sometimes, but it's the only thing that I know. When it gets hard, you know it can get hard sometimes. It is the only thing that makes us feel alive. We keep this love in a photograph. We
Alright boys, I'm not sure if everything's working fine. Definitely does not seem like it is. But give me a bit of a shout out, right, if you can actually see the videos. My YouTube's gone a bit hectically. One of the screens where I check my things. Got a little bit of action going on, that's for sure. Sorry it's a little bit late today. I'm going on leave for a week, so I had a few loose ends to tie up. It's just not easy to take holidays in the finance industry if you've got a lot of clients and things that need to be done. Everything gets sort of backed up to the last moment. Yeah, so it's not streaming for me. They're back to me on my end, right? It looks like it's okay-ish. So if you can see it, just give me a clear out. You can hear me ranting or not? Alright, too easy. Yeah. This is what I see. I'm like, okay. Alright. Beautiful. All right, so when we were streaming yesterday, the market, especially dollar yen, we are talking about the short squeeze that was happening in the euro and the likelihood of it continuing. Now, this is when the market was just going towards the high of the day, right? And it's like, well, I mean, this is not how short squeezes work. They do not stop just at this level, never, almost. And so the pullback came, and then about an hour later, the market busted higher above 107. Then I was off towards 108. So fairly violent move. Almost a 300 pip rally from bottom to top there. That's one of the bigger ones. I suspect we might have a little bit more room. I am short already at 107.50, but I'm not happy about it. I'm not feeling safe at all. It really easily could have another leg higher here, and then would get to some really nice selling levels, especially if you believe that over time the euro is going down. The thing which you've got to be worried about here is ECB on Thursday. ECB on Thursday could turn out to be a major event that people aren't watching. It's to do with the announcement of how they're going to end their QE. So they're going to extend it, but they're also probably going to provide details there on how they're going to on how they're going to end it, right? So this is taper talk. Now, taper talk can cause crazy moves in the market because it's a tipping point. Once you tell the market about the end, they're no longer just enjoying unlimited amounts of QE. It's basically at the end of QE, right? This is when the QE is ending, and you know how the market works. It likes to front run things. Okay, now if it's just front running, how much selling of the euro is on the basis of QE going on for an extended period of time? I mean, it could be hundreds of pips. Right now that you've got a definite ending date or ending scenario, the market can start to price out when they're going to phase out their QE, and it could be worth at the end of the day. I mean, it might put the bottom in on the euro, right? It literally might do that. You combine that with, say, the Fed doing a dovish hike next week, where they just basically say they're going to be very patient in raising rates or something to get the market stopping or easing the speculation on a June 2017 rate hike, then you got yourself a scenario where the bottom's in on the euro. So by no means is it just a clear cut we're going to parity, that's for sure. We're already quite low in the cycle on the euro. Now, I like the argument that the euro is going lower more on political risk rather than anything else, right? That's the sort of argument that makes sense to me. I forgot to show my beautiful face here, boys. 1 second. All right, so I'm much more into the camp that France and French politics and potentially next Italian election, also Dutch elections as well, could be the catalyst to get the market selling. But right now it's that's a long ways away, and crazy stuff can happen. The US dollar buying, the US dollar yield rally is quite substantial already. If that eases back, if that runs out of steam and reverses, US dollar will get crushed. All right, the positioning is so extreme on many pairs that the reversals will just really wipe out a lot of traders if you're not careful. Stops are definitely necessary going into the FOMC meeting. Just on the chance they're going to taper talk. Sorry, they're just going to be doing a dovish hike. That's worth another couple hundred points. So what I'm telling you here is that theoretically we could be sitting here Christmas Day in the euro 111. Okay, no sweat at all. A lot is priced in. The euro's taking it like a champ, and a lot of it to do with the 2-year difference between the bond and the US, so US and German bonds. Now if that sort of starts to close in, because right at the moment it's extremely high, and it's getting wider. In the US's advantage, but if that starts to shrink, then you're going to see the euro short cover, and that short cover can turn into a rally. So let's not get too bearish here. Even when I'm going to be selling into this rally here, I'm pretty keen to sell into this rally. I'm definitely going to be tactical about it and using stops on it. That's exactly right, FX Ram. Yeah, and that, I mean, if the Euro's a 111, where does that put our other pairs? All right, well, let's go have a little looky. That puts Aussie back at 76, 77. No sweat. That puts dollar yen probably back towards 112, 110. Maybe not too much lower than that, because dollar yen is also related to stock market. Stock's probably going to love the Fed not get out of here. Stocks are probably going to love the Fed being dovish hiking, and so I don't think it's going to go below 110 on that alone. The pound, which is already in soft Brexit mode now, is just relentlessly rallying. He could get to 130 quite easily. So, you know, that's the sort of movements that could be happening into Christmas if this thing takes hold. So, look, continue to sell into the rallies and just be US dollar bull, but just be wary of the risks. It's not all one-sided action, that's for sure. Let's put dollar CAD back at 130. Dollar CAD might capitalize more than most. Actually, I don't mind the dollar CAD here now, given that price action yesterday. But yeah, I'm still going to be a US dollar bull until that's proven otherwise. I understand the US bear case. I understand it, where it's coming from, and I'm not going to be surprised if it plays out. I'm having a week off starting. This is my last thing I'm doing actually till the Wednesday before FOMC. So I'll be back 9 GMT Wednesday FOMC, where we're going to be going over the Fed, and also where the market's position going into that announcement is going to be so key to how it plays out, to what's going to be needed for the US dollar bull run to continue. What she says, I mean, I'm an old man now. I don't really stay up for these FOMC meetings, but I might stay up for that one. That one could be a bit of a doozy. It could be worth staying up for if you're a trader in the Asian session anyway, or getting up for. And so that's gonna be interesting times. It's the last big event for this year, yeah. And then it's gonna be really quiet probably for the 2 weeks after. I mean, we could get surprised, but I wouldn't bet on it. So what did we get filled in? So there's, you know, we really want to get filled on that short euro. We put it 150 pips away yesterday, and yeah, we got filled, and we're actually negative still. So now I told you that we needed to put a stop loss in, and we're going to put it just above here, probably around 108.30. Okay, that'll do. If it gets above 108.30, we'll reconsider what's going on. Step to the sidelines for a little bit, and you know, maybe sell again higher. But by no means am I going to go to war with the market at these levels. Aussie dollar. All right, while the euro is rallying, I'm not going to be involved in that just yet, so I'm going to get out of that now, take a little loss. And then my dollar index, one of my favorite ways of playing it, came down to the 100 level and has bounced off it a couple of times. Actually just bounced off it again. I'm going to buy a little bit more. Nice and easy place to put your stops now. Okay, so this is, everything's going to be tied into the, you know, what's going on here with the euro. That's the big boy in the market. Pound looks pretty relentless though, so this could get us in trouble. We are making money on one trade. We wanted some euro exposure. We didn't want to go against the US dollar, so we went against the Swiss. That's nice. Just going to take profit on that. That one's a little bit cheeky too. It's not that I don't trust the euro rally, there's strong chances of reversing. Aussie Kiwi is still breaking hearts. We haven't looked at this for a couple of days. Remember when we were talking about that relief rally back to parity and then get out of any legacy longs that you got into? I'm not sure what our mate's done on that, actually. Hopefully he got out. I haven't checked Nick's trades. Steady capture, I think, was in that. I'm not sure if we got out of that. I'll have to double check. Yeah, this is a very bearish setup. Got a lot of room to move to the downside here. I'm guessing traders are going to be watching this 200-day and see if it holds or breaks. Joe Pro, what? You know I work in a brokerage, right? So they just smashed down the in Cyprus, came out, with a hammer, right? So a lot of brokers have licenses for Europe out of Cyprus. FCA's come out too, huh? Let's have a little look at it. Wow, man, probably ATSIC's going to come out and do the same. I work under ATSIC license, so it's probably going to be ATSIC who comes out and does the same sort of thing. I mean, I can understand why when so many people lose, right? Fuck me. That's massive. That's massive. That's very similar to the, I mean, at least we can hedge, right? At least we can hedge. It's not as bad as America, but wow. So maximum leverage is 25-1 if you don't have 12 months of experience. I don't think Cyprus had a hard cap on the bonuses. I don't know who the big boys have got those FCA licenses. I mean, this is going to make ATSIC either have to do something, or Australia is going to become little Forex capital of the world. Oh yeah, I mean Sussex, basically, basically they're going to be pushing people to ramp up the leverage, especially the old clients, right? They might even tailor it up. Look here, if you want to request higher leverage, take this test, and your trading conditions will stay the same. They're definitely not going to want to change trading conditions. I mean, the reason why brokers have such high leverage is to get the clients to overtrade, to over leverage, and then get wiped out and just market volatility. That's the premise here. That's where the money's made. The fact that you're going to change it like this, then that means that B booking is going to become a less desirable game, and there's going to be a lot more STP. Now, you may say that's great, right? It's not great for me because I love to be trading on a B book because the B book will give me better execution. STP execution is terrible. Like when I'm trading at a broker and then they put me from their B book to the A book, I know. I can feel it. I can sense it. Like there's literally 2-3 second delays in getting filled. It can get ridiculous. right? I don't know if all brokers are going to be the same, but you know, I haven't found a good STP broker yet. Yeah, and just because they say they're an STP broker does not mean that your trade's STP, right? At all. You know, straight through processing to who? To another liquidity provider. Who owns that liquidity provider? I don't know. XYZ company. Who owns that company? Our parent company. Do you know what I mean? Like it's definitely not transparent there. You have to go digging, and I don't think there's a responsibility to tell the truth to the clients either. Really, I mean, no one. I don't. I'm not going to go naming names, but all the big brokers I know. Only one who I'm not 100% convinced is doing it is FXCM, because I know someone who worked there and they said it weren't. And I mean, that's all well and good, and because they nearly went bankrupt because they couldn't get they got wrecked by the clients' losses that the banks that were giving liquidity were chasing up. But even that little whole maneuver that FXCM did, I mean, they're probably one of the only ones out there doing it. And so, if you didn't use the over leveraged 400 to 1 stuff that the brokers gave you, and you used just 100 or 50 to 1 leverage anyway, and you loved the sort of B-book execution that you could get, instant execution almost, then you're not going to be happy here with what the market's going to move towards, that's for sure. And then, once that happens, then a lot more clients are going to start making money, because if you don't get wiped out on a 50-point move, then you're going to have to get wiped out on 200-point moves. I don't know. I suspect there'll be some sneaky stuff going on. I suspect swap rates are going to go through the roof. Right? They'll say, oh, US is raising rates. And that's what they'll say to you, right? US is raising rates, so that's why it's costs. That's why it's changing so much. Oh, there's a blowout in the yields. I can imagine it now. Blowouts in the yields, boys. Blowouts in the yields. All of a sudden, you're paying a pip a day on every pair. 2 pips on short dollar yens. So yeah, I don't know. There'll be other ways of brokers to try and make money. But it could be a good time to start looking around at different brokers, right? Trying to find, the new thing, because ECNs were just a joke anyway. So that's not going to be, the way to trade. And if I'm trading at 50 to 1 leverage, bloody hell. What are we going to be doing? Yeah, no, it's going to be interesting times for the whole industry. I suspect there's going to go from 1,000 brokers down to 50 brokers very quickly, if this goes through everywhere in the world. Potentially even less. This is the end of the dodgy bonus B books. I mean, it'd be good for Forex to get a good name after a while. Yeah, that's enough rant on that today. I really wonder what they're going to do. I work for a really old broker. We're like one of the first 4 brokers. We're the first broker ever to put credit cards into online deposits. That's like a revolution back in the day. But no, they haven't. Definitely didn't go down the tight spread ECM path. Just kept on the service path. Never grew at the size which it could have been. Alright, let's have a look at some research, boys. Such a nice level. Hit this 100. Previous support, previous resistance, now our support base. We might take another leg lower. Actually, I might drop these 2 others down a little bit. Okay. Yeah, so every bank's now coming out with their report on the correction going on in the US dollar. Let's have a little look here. We're going to see a lot of Fibonacci's coming at us in a sec, I believe. But it'd be good to check. We haven't actually checked the Credit Suisse for a while, so we'll have a look at that too. Yeah, there's supposed to be this UK Court Supreme Court, so UK Supreme Court hearing. That's supposed to be today, but I'm not sure the timing on when that's going to come out. And from what I've heard, they're going to be very similar in their views. They're gonna follow the High Court from what I can gather. You know who we're gonna steal a little glance from now? We're gonna steal a little glance from Ashraf Laddie. Now, he's actually a pretty good analyst. If you guys have never seen him before, he's one of the top analysts out there for the Forex. He's an intermarket trader like myself, so he watches a lot of things, tries to piece them together. Him and Adam Button are very, very good. Those are the two guys I'd bring in. It does not want to work for me today. What is happening? My streaming's out of control. That's not my breathing, Joe. That's my vaping, mate. He's gonna have to talk about Euro USD. Lady, we'll watch it in a sec. It is possible, reader. You can PM me, mate, if you want. If you want me to look at a particular pair, you can PM me. I don't mind looking at any pair. It's best if you PM me beforehand, just in case I haven't looked at the pair for a little while. Then I can do a little bit more preparation for you. But it should be okay. If you want me to look at a particular pair right now, just say So I've got a lot of room to move here, even inside this downtrend. Wow, Huge pullback levels. So these are the fibs that I was talking about. Okay. That's a huge pullback in dollar yen. I hadn't looked at it on this sort of graph before. Yeah. I know a lot of smart people selling dollar yen. I know a lot of smart traders. I just don't think euro yen's going to give up that much. I'd rather be long euro than short dollar yen, honestly. If that was the game that you're trying to play. What website, mate? This is a PDF report, Jared. And this is from FXWW. If you want to get access to FXWW, it's around $50 a month, but they do have a little trial. So, yeah. I'll put a link into FXWW in the site, in the chat. That's where I get all my research from. Just a bunch of traders that hang out there. Bank traders, hedge fund traders. Okay, pound yen, good pair to have a look at. We'll see if it's on this report, but if it's not, we'll go have a look at it. Pound yen is obviously, the main thing that sets the direction for the pound yen is the dollar yen. Now, if you've heard me talk about the pound yen in the past, a big part of if the pound can rally is where the dollar yen's rallying, because when pound yen's rallying, the pound outperforms most pairs. So don't underestimate the amount of movement that the pound yen gets, and its impact on the pound itself. So literally, if the dollar yen's going to fall in a US dollar correction, then the pound's going to underperform something like the euro. It's just the way it is, because the pound yen's such an important cross. And it just turns out that when you do have US dollar corrections, you usually got stock market corrections, and the pound just underperforms the other big currencies, namely the euro. Okay, so if you're looking at sort of those movements, you can see it very clearly. Before the crash in the pound, when it was doing its own little recovery. Okay, I know it's hard to believe me unless I show a little bit of proof on this. A little bit of proof time. This little outperformance here by the pound. Remember, we were talking about the pound recovery, the pound recovery trade. This is when the market was still fresh, starting to grind higher again. At that same period, where are you, dollar yen? This same period here that the pound was doing its nice little rally, dollar yen was having a nice little rally. What do you think pound yen was doing in that scenario? The pound yen was going berserk. Okay, so if dollar yen's going to have a pullback to 110 or 111 or 112, the pound's probably going to be dragged lower with it, right? Or at least underperform the euro in terms of the rally against the US dollar. And so yeah, pound yen will take a beating. This is why the pound yen is so dangerous, because when it reverses, it's not going to reverse 300 or 400 pips like the dollar yen. It's going to reverse 600, 700, 800 pips. So where does that put us? Where does that put us from here? At least back below 140. Probably back towards maybe 138.86. Alright, PP in air. So keep an eye on dollar yen. This is not a safe trade anymore. The easy money's done on this. After the dollar yen correction comes around, yeah, look, definitely get involved in the pound yen. Pound yen should be able to perform, especially if a soft Brexit comes. Then you've got, you know, really good upside here. We've got, you know, still a couple of thousand points without breaking a sweat. I mean, imagine where we would be if without the Brexit, right? Dollar yen's going berserk. You know, we would be at 170 or so. So don't just look at these things. You know, the yen is actually extremely weak, and the pound yen's still very low. Ooh, that was a big rally. Those were the days 2012, 2013. That's where we made some money if you're bull on the pound yen for sure. Alright guys, so yeah, this is it's an interesting pair. I didn't get much of it on the way up, that's for sure. Alright, Aussie dollar is confirming itself as the most boring pair in the market. I suspect we're going to have a little temp higher if we are going to have a US dollar pullback. PPNR, look, I wouldn't say that the move is over on pound yen, it's just that it's closer to the end than the beginning, for sure. Closer to the end than the middle. You know, probably 80-90%, if not 100%. Kiwi dollar's not doing much either. Dollar CAD. So a pullback to 130 makes a lot of sense. Should outperform the other commodity currencies as well, just because of the dollar yen. Euro yen has established itself above 122. Even if dollar yen pulls back, I think the euro is going to outperform here. So I'm not looking to sell euro yen. And euro pound. Now this is an interesting pair. Let the euro pound reversal run, and then hopefully we can get into selling around about 86. Keep an eye on 86 in a high 85s. We want to get ourselves a little bit of this. We would love to get ourselves a little bit of this. Alright, let's set some trades here. I'm going to set all these trades, let them run while I'm on holidays. I'm not going to try and not touch them too much. Just pretty much dollar index and short euro. We'll see how much trouble we can get into. I'll be stopped out in the short euro at 108.26, so I might be stopped out in these dollar indexes if there's a big move on the dollar. But these are by no means surety things, right? US dollar is still very strong, and these are just what could happen and then how to take advantage of it happening. Okay. Let's see if that Ashraf is loaded up already.
Really, the vote went as the market expected. The market had a long time to prepare for this. So, I mean, why even react in the first place?
Yes, if you're referring, Bernie, to the 3-minute reaction, you know, the gold rally and the euro drop, the same 3 minutes that we saw when Trump won, for the dollar decline and the drop in the stock market. If you're referring to that, Yes, I think markets, when they see a chance to for a knee-jerk reaction, they will do it, or probably better to enter at more attractive levels to buy the euro. Why? Because they probably are quite sure that the ECB is neither going to cut interest rates and nor going to expand the purchases of assets, because inflation is still well below 1%, but it's at a 31-month high. So the urgency for the ECB to act is not so high, so they will do nothing next Thursday. Probably they will extend the duration of QE from ending March to ending September, but that would probably do that. So we could see the euro push back up until the next Fed meeting.
Pretty much echoing what we talked about earlier today. Nothing to see there. Alright guys, well look, everyone try and trade safe. I'm not going to be here for a week like I said. Hopefully not too much changes and I don't... Oh Jesus. You know how they're talking about the FCA ruling? IG markets is down 30% on the back of that news. Wow. Wow. Alright, I'm gonna have a look into that now. I'm gonna probably buy a little bit of that. That's great opportunity, I think. Alright guys. Yeah, look, the potential for the US dollar to be sold off in the next few days is real. I would still be using it as an opportunity to get long if it does happen. If the market remains long US dollar and doesn't have a pullback into the FOMC meeting, then the chances of a US dollar pullback post Fed get stronger. But by no means is all of this we have to be a little bit careful with. You know, trying to pick the timing of a short squeeze or correction is very difficult. And that's why we're going to stick with the trend majority of the time. Alright guys, good luck with your trading. Trade safe.